Good afternoon, everyone. In today's video, we're going to continue looking at what happens in the S&P 500 after an FOMC related event. And in today's case, it was a big event where the model still continued to play out the way we would expect. Now, I'll leave a link to July's video here, which details the model in a little bit more description. I'll give you a brief overview before we dive into charts, or rather the recording, to see what ended up happening. But if you'd like multiple examples, you can also revisit June's video, March's video, January's video, along with videos going back to 2020 and even 2019 for more examples. The overall idea or the recurring pattern that I've seen happen, especially after we have one of these events, and more so in 2022, is the following. It's really a three-part move. First, we have the bulls in control. After that, the bears take control, bringing price action below where the bulls started off. And then we finally have bulls try one more time, taking us to that same midpoint where really all of this volatility began from. Now, the yellow portion of this is the part that we can model, the part that's predictable, and the part that has been a recurring theme that happened in July, or earlier in July, I should say, in June, March, and I believe January as well. So it's a pattern that's recurring. After we come back to the blue line, though, that's where you have to use price clues to make a decision as to which way you think price is likely to break. Option 1 is the bulls take control, and we take price action up above even this high that we made not too long ago as part of this yellow price movement or this model. So that's option number 1, which earlier in July, that's the option that panned out. We broke above the high and we continued rallying all the way up for the rest of the day after that 11 a.m. meeting. Now, option number 2 is the exact opposite, which is we break below and we make new lows, at least given this move right here. So the yellow portion is the predictable, repeatable pattern. The green and the pink are where price clues come in to make a decision as to what is more likely to happen. Now, one more thing that I'll point out before I play the recording from today. Leading up to 11 a.m. Pacific, so the FOMC meeting minutes, we had very little volatility. In fact, if we take the low to the high here, that move was right around 30 points or so. So not a whole lot of price movement leading up to the actual meeting minutes being released. One call out before I show you the recording. This candle, as soon as Powell started speaking, it's a 1 minute candle, was about 22.75 points on its own. And really 3 or 4 candles combined took us more than that 30-point move that we saw for several hours leading up to the day. From 6:30 all the way up till 11, we made a greater price movement from really 11:35 up until 11:40, so in that 5-minute span. That highlights the level of volatility that entered the markets as soon as Powell started speaking, which was right around that 11:30 mark. Now let me play you a real-time video so we can revisit and take a look to see how price action shaped up today and how it fit inside of the models. Now to start off here, this is at 11 a.m. and this is when I started the recording. This is when the meeting minutes were first released. So as part of the model we're looking for, initially we're looking for an upside move here, a short but still sustained upside move. This is a 5-minute chart that the recording's on, so keep that in mind as I continue playing forward. So as the market starts to digest the meeting minutes information, we have the initial upside movement that we've gotten accustomed to seeing. A long tail wick on both sides, but still so far a bullish candle, and you'll see once it closes as a pretty substantial bullish candle. Now the next 5-minute candle, the bears reject that level, and we have the downside move as part of the second part of that model. So just to recap one more time what we've seen so far, we have the up move, we have the down move. Now let's continue to see how this plays out. So the down move takes us even lower. Then we have bulls coming right back in, taking us to that middle line where price action starts to chop around for a little bit. So let me draw on this just so we can paint out the same thing we were talking about. So first the up move, then the down move, then the reaction, taking us to really the middle point where all of this volatility began from. Now at this point, we need to start to use price clues to make the decision around which way do we think price is likely to break. So if I keep skipping forward here, you'll see this is still before 11:30, before Powell has gotten to the mic. Price is trying to find some sort of a footing here, but really it just ends up chopping up and down. You can see how the wicks really take us to where all of this volatility began. So this was the action leading up to Powell speaking. Now let's continue playing leading up to Powell speaking, and then you'll see as soon as he takes the mic, we have a giant green candle. So if I keep fast forwarding through, we're still on a 5-minute chart here, and then I switch to a 1-minute time frame chart so we can get a bit more granular, but still we're chopping around in that middle zone where we're trying to still determine which way does price break. Now I've switched this to a 1-minute time frame chart. You can see that right here, just so we can see what's happening inside of price. Now, initially, it looks like the bears are in control and we're about to see a downward break even below the lows that we made. If I keep moving forward here, we even tag that low, but instead of breaking below it, we end up finding a little bit of support. And as soon as Powell takes the mic here, the bulls come in charging, where we rally in a very strong fashion above the previous highs, which then takes us to that bullish break. Now, once we break outside of the previous high that we made in that 11 to 12 a.m. hour, we also tag the upper edge of our volatility box on the scalper. We see an initial reaction, no edge signal, but we have bears coming in, selling this level. Bulls are still very strong here. And here we can see bulls very clearly have a good deal of strength, taking us even outside the scalper. Now, as soon as that happens, that's our sign to switch over to the aggressive volatility box models. And you can see that's the model I now have on my charts here. The aggressive is the model that really ends up being in play for much of the day after we switch over from the scalper. Now we have bullish strength continue. You can see the candles are starting to become a bit smaller as we tag the upper edge of this volatility box zone. Once we tag it, we start to see another bearish rejection from that level. Now keep moving forward. Bulls try one more time. They keep trying. We then have the first edge signal on the 1-minute time frame chart here form shortly after. Price is definitely starting to stall out, or so it seems, once we start to see 1, 2, 3, 4 red bear bars, and finally a bearish edge signal. That signal finishes printing, and we have a retest of the cyan entry line. So this right here was where I was looking to fade price action, looking for price to continue falling down lower here. This seemed like too strong of a bullish rally, and I was looking for a bearish break. Now let me show you what ends up actually happening here. So price continues rallying, but for this, we can come back inside of our charts. So now price rallies. We end up starting to really trade inside of this very narrow channel here. We ended up going short right here. We then had strong bullish reaction, which was met with resistance. Again, a second edge signal confirmation. Looked again to me like we were likely to break down lower. Instead, bulls continued charging forward, where in the end here, we ended up going outside of even the aggressive volatility box clouds, made a new high before eventually spilling over into the actual close here. Once we broke past the trend line, we broke it, we tried to test it from the underside, and then we had sellers finally take over control, at least for the final 30 minutes or so of market activity here. So to recap everything that happened in today's FOMC day, we had the initial upside reaction, we then had the downside reaction, then we came right back to the middle and chopped around there sideways for a bit of time. This initial portion is the part that we've modeled, the part that's becoming a little bit more of a predictable pattern, a pattern that's tradable. Then we had a bullish break as soon as Powell started speaking. That bullish break broke outside of the scalper, hit the upper edge of the aggressive. The aggressive was the one that hit all of our rules for the fade setup. That setup still did not work. We saw a great deal of bullish strength, taking us to new highs all the way up to 40, 42, before we then had sellers take over control for the final 30 minutes, breaking outside of this channel, and then we're now trading inside of the zone from which we fell from. So that was today's FOMC day. Nothing short of a volatile day, but like we were expecting after Monday's very low volatility, volatility came creeping back into the markets, and that too in full force with today's FOMC event. I'm looking for this volatility to continue now into tomorrow along with Friday. One more note for those that were looking at trading Microsoft earnings. We did a quick pattern in here, pattern recognition using the Smarter Earnings tool. The end gist that we had was we were looking for a gap and go to the bullish side, looking to tag this trend line from the underside. I'll leave a link to the video that details the logic and why we had that bias. Today, in terms of how close we got to the trend line, if I switch to a 1-minute time frame chart here, and I take you to today's activity, we got pretty dang close. We got to 270.05 in terms of the high before the market closed. The level that would represent the upper edge of that trend line would be right around 271. So I'm still looking at that as being a potential test here as we head into tomorrow's trading activity, where hopefully this volatility continues and we have some interesting trades set up as a result of that. All right, I hope you found this video to be useful for those of you looking to trade the FOMC events. Again, be sure to review the previous videos. I think they'll help in terms of seeing how previous price actions have turned out inside of the S&P 500, and you can use that to be better prepared for future events as well. Take care, everyone. Good luck trading, and we'll see you in the next update.